All right, buckle up, everyone, because this week in crypto was a wild ride.
Definitely a roller coaster.
We're diving into the crypto market from February 16th to the 22nd.
Yeah, that week had it all.
Bitcoin almost hit $100,000 again.
Oh yeah, almost.
Ethereum was swinging all over the place.
Big swings.
And Solana, well, Solana took a bit of a tumble, didn't it?
Yeah, Solana had a rough week.
We've also got some surprise altcoins making big moves.
Some big winners for sure.
And some major players in traditional finance are making waves in crypto.
It's getting interesting out there, that's for sure.
Okay, so let's break it all down. What was the overall feeling in the crypto market this week? The general vibe.
Well, two words come to mind. Volatility and uncertainty.
Makes sense. It felt like every time a coin tried to gain some momentum, something happened to pull it back down.
It did feel that way, yeah.
Do you think macroeconomic concerns played a role in that?
Oh, absolutely. Those concerns were definitely weighing on investor sentiment.
It's like a dark cloud just hanging over the market.
You could say that, yeah.
Okay, so let's talk about the big players. Bitcoin made another run at $100,000, but it just couldn't break through. What happened there?
Well, a few things seem to hold Bitcoin back this time.
Like what?
Well, first, there was news about the U.S. job market softening, which, that always hints at broader economic uncertainty.
Right, and when the economy looks shaking, investors tend to get a little nervous.
Exactly. And then there was also talk about potential U.S. tariffs, which just added to the whole global trade worry.
So kind of double whammy on the economic front.
Yeah, pretty much. But there's another factor we should consider, too.
Oh, right. The report also mentioned something about institutional investors pulling back a bit.
Yes, we saw some pretty significant outflows from Bitcoin ETFs.
Right, so these outflows, what do they tell us?
Well, they could be the sign that some of those big institutional players are maybe, starting to lose a bit of their enthusiasm for Bitcoin.
Interesting. So it's like a mix of macroeconomic jitters and maybe a little bit of waning institutional confidence that's keeping Bitcoin down.
Yeah, I think that's a fair assessment.
Okay, so let's move on to Ethereum. It also saw some pretty big price swings, but it seemed to hold up a bit better than Bitcoin, wouldn't you say?
Yeah, I think so. It had its share of drama,
Oh,
definitely.
for sure. It dipped below $2,700 at one point, if I remember correctly.
Yeah, you're right.
But ultimately, it didn't completely crash and burn. What do you think helped it weather the storm a little better?
Well, I think the excitement surrounding Ethereum's 2.0 upgrades played a role.
Ah, yes, Ethereum 2.0. For those who are new to this, that's a major upgrade to the Ethereum network that's supposed to make it faster, more scalable, and more efficient.
Exactly. And then you have the continued growth of DeFi, which is, of course, built primarily on Ethereum.
DeFi, decentralized finance. It's basically a whole parallel financial system running on the blockchain.
Right, and it's been exploding in popularity.
So it's like all this positive momentum around Ethereum 2.0 and DeFi kind of balanced out some of the fear and uncertainty that was dragging down the broader market.
Yeah, I think that makes sense.
Okay, that's Ethereum. Now, Solana had a rough week, didn't it?
It did, yeah. Double-digit decline.
Ouch. What happened there?
Well, there are a couple of factors at play, I think.
Okay, let's hear them.
The first is this news about millions of SOL tokens being unlocked soon. So these tokens were previously locked up, meaning they weren't available for trading.
I see. And now they're about to hit the market.
Exactly.
So that's going to create a sudden influx of supply, which could lead to some selling pressure.
Yeah, exactly. Basic supply and demand. When the supply of something increases, the price tends to go down, at least in the short term.
Makes sense. And on top of that, we've also got those ongoing concerns about Solana's network stability.
Right. There have been a few incidents recently where the network experienced slowdowns or even outages.
Which obviously doesn't inspire a lot of confidence among investors.
No, it doesn't. So I think it was kind of a perfect storm for a price correction. You've got this increased supply coming online, plus these lingering doubts about the network's reliability.
Yeah, that's a tough combination to overcome.
It is. But hey, on the bright side, we saw some altcoins absolutely crushing it this week.
Oh, yeah. Cardano, for example. Over 12% surge.
Incredible, right?
What do you think fueled that rally?
Well, Cardano's been quietly building out its ecosystem, focusing on security and sustainability.
They've also gained some traction in emerging markets, haven't they?
They have, yeah, which could be driving some of that adoption. And then, of course, there's always the element of speculation and hype.
Oh, definitely. The fear of missing out is a powerful force in crypto.
It really is.
But it's interesting to see these altcoins thriving while the big names are struggling. What do you think that tells us about the state of the market?
I think it shows that the crypto market is incredibly diverse and dynamic.
How so?
Even during periods of uncertainty, like we're seeing now, there are still opportunities for growth and innovation.
So it's not just about Bitcoin and Ethereum anymore.
No, not at all.
There's a whole universe of altcoins out there, each with its own unique potential.
Exactly. It's a reminder to look beyond the headlines and really dig into the fundamentals of individual projects.
I like that. It's about finding those hidden gems and understanding the trends that are driving them.
That's the key.
Speaking of trends, let's talk about one that's impossible to ignore: institutional adoption. This week, we saw some huge developments in that area, starting with Brazil.
Oh yeah, Brazil made a big splash this week.
They did. They just launched Bitcoin options and futures contracts for Ethereum and Solana on their main stock exchange.
And B3, their main stock exchange?
That's massive. When a major economy like Brazil fully embraces crypto derivatives, that's a big deal, right?
It's a huge deal. It's a sign that crypto is becoming increasingly mainstream. It gives investors more sophisticated tools to manage their crypto holdings, and it also signals that governments are starting to recognize the potential of these assets.
Yeah, it definitely feels like a turning point. And to top it all off, we've got Franklin Templeton, a global asset management giant, expanding its money market fund onto the Solana blockchain.
I know, it's amazing.
They already have a presence on Ethereum and Stellar, so why Solana?
Well, they've clearly been impressed with Solana's scalability and low transaction costs.
It's another example of traditional finance dipping its toes, or maybe even diving headfirst into the crypto world.
Yeah, and I think we're only going to see more of this in the future.
So even with the price dips and the volatility, these institutional moves suggest that the long-term outlook for crypto is still very positive.
Absolutely. It's a clear sign that traditional finance is converging with the crypto world, and that's incredibly exciting.
It is. But let's not get too carried away. We need to talk about the risks as well.
Oh, of course. The risks are always there.
The report mentioned some concerning news about meme coin scams and a major hack linked to the Lazarus Group.
Yeah, that was definitely a wake-up call.
Meme coins are already risky enough, but adding a connection to a notorious hacking group like Lazarus is just scary.
It really highlights the fact that no system is completely foolproof. Vulnerabilities can exist even on the most advanced platforms, and hackers are always looking for ways to exploit them.
So even with all the positive momentum in the crypto world, we still need to be cautious.
We do. Security should always be a top priority.
Absolutely. Meme coins are already risky, but when you add in a group like that, a group that was behind a $1.4 billion hack, it's a whole other level.
Definitely raises some eyebrows.
It makes you wonder, if a platform like Solana, which is known for its speed and low fees,
Right, cutting-edge technology.
if Solana can be exploited like this, what does that mean for other blockchains?
It's a good question. It shows that no system is perfect. Every platform has its vulnerabilities.
Right, no matter how advanced they seem.
Exactly. And the hackers are always getting smarter, always finding new ways to exploit those weaknesses.
So let's talk about these meme coin scams. How do they actually work? How do they trick people?
Well, a lot of it comes down to hype, the fear of missing out.
Oh yeah, FOMO. That's a big driver in crypto.
Huge. And meme coins, they often have these catchy names, funny memes attached to them.
Right, they're designed to go viral.
Exactly. So the scammers, they create these fake websites or social media accounts. They promise these huge returns.
Get in early, make a fortune.
That's the pitch. And they urge people to buy these tokens quickly before they supposedly skyrocket in value.
So they're preying on people's excitement, their greed.
Absolutely. And these scams can be very sophisticated, too. They might even create these whole fake communities, fake endorsements, to make the projects seem more legitimate.
So it's not always easy to spot a scam.
No, not always. You really have to be careful.
So what can people do to protect themselves?
Research, research, research.
That's the key, isn't it?
It is. If something sounds too good to be true, it probably is. Always look for red flags, promises of guaranteed returns.
Right, those are always a warning sign.
Definitely. Or if they're pressuring you to act quickly, that's another red flag.
So don't rush into anything. Take your time. Do your due diligence.
Exactly. Look for official websites, check their social media accounts, see if you can find any independent reviews or analysis of the project.
So basically, don't just blindly trust what you see online.
No, absolutely not, especially when it comes to your money.
Good advice. What other tips would you give for staying safe in the crypto world?
Well, security hygiene is crucial. Strong, unique passwords for every single account, and two-factor authentication.
I can't stress that enough. Two-factor authentication is a must.
It adds an extra layer of security. It makes it much harder for hackers to access your accounts.
And what about phishing scams? Those are pretty common, aren't they?
They are, unfortunately. So be very careful about the websites and links you click on. Always double-check the URL. Make sure you're on the official platform.
And never, ever enter your login information on a site you don't trust completely.
Exactly. Even centralized exchanges can be targets, like we saw with the Bybit hack.
Right, that was a major hack. hack, wasn't it?
It was over $1.4 billion stolen, so it's crucial to choose reputable platforms, exchanges that have a good track record of security.
Speaking of the Bybit hack, you mentioned a bounty program earlier. Can you explain how that works?
Yeah, so after the hack, Bybit launched this program where they're offering a reward to anyone who can provide information that leads to the arrest of the hackers or the recovery of the stolen funds.
Oh, that's interesting. It's like crowdsourcing an investigation.
You could say that, yeah, they're basically tapping into the power of the community to try to track down these criminals.
It shows that they're serious about security, that they're committed to holding these hackers accountable.
Exactly. And rebuilding trust is so important, for the whole industry.
I agree. It's good to see that level of transparency and accountability.
It is. It is.
Okay, so we've talked about the risks, but let's not forget about those positive developments we discussed earlier. Brazil embracing crypto derivatives, Franklin Templeton expanding onto Solana.
Those are game changers, no doubt.
They're huge steps forward for mainstream adoption, aren't they?
They are when a major economy like Brazil introduces crypto derivatives on its stock exchange.
Yeah, that sends a powerful message to the rest of the world.
It does. It says, hey, we're taking crypto seriously, and that can have a ripple effect.
And Franklin Templeton choosing Solana over all those other blockchains.
Right, out of all of them.
It shows that they're confident in its technology, its potential.
Exactly. They're putting their money where their mouth is.
So even amidst all the volatility and the security concerns, we're seeing these really encouraging signs.
We are. It's an exciting time to be involved in this space.
It feels like we're witnessing this convergence of traditional finance and crypto.
It does, doesn't it?
And that's a really powerful trend.
It is, and it's only going to accelerate from here, I think.
And that's a great note to end on. Thanks for joining us on this deep dive into the world of crypto.
It's been a pleasure.
Remember, knowledge is power, and we're here to help you navigate this exciting new frontier. Until next time, stay informed, stay safe, and stay tuned for more crypto adventures.